Hey everybody, welcome to my channel. I have a special surprise for you guys in this video. I'm going to be conducting my largest giveaway to date. I'm doing this in collaboration with this video sponsor, Cobalt Lending. One winner will receive a Ledger Nano S. Two winners will receive $20 each in Ethereum. And the first 10 people to like this video and comment below with their Ethereum addresses will receive 450 Cobalt tokens apiece. The Cobalt token sale doesn't start until October 31st and it's going to go on for 30 days. So what I'm basically going to do is take the first 10 Ethereum addresses from the comment section, put them into a spreadsheet and send them over to the Cobalt team. Once the ICO has been completed, everybody in that spreadsheet will get 450 Cobalt tokens apiece. Now for the people who win the Ledger and the free Ethereum, you guys will be notified about your winnings 2 weeks after this video is published. But make sure to join my Discord channel by clicking the link in the description below, because that's where I'm going to be announcing the winners. Now with that out of the way, let's go ahead and dive into this video. Alright, to get this video started, I wanted to make one thing very clear and transparent with my audience. This again is a sponsored video, meaning I did receive compensation for producing this video. And I'd also like to emphasize that the team didn't have any preconditions for this video. All they wanted me to do was to create a fair and balanced video introducing the project to my audience. And for that reason, you can see that the format of my video hasn't changed much. I'm going to give you guys a brief introduction on the platform, go over the tokenomics, give you guys the pros and cons, and end the video with my thoughts on the project. And if you guys are curious to find out if I'll be participating in the ICO, I encourage you guys to watch this video in its entirety, because at some point in the video I'll be disclosing those details. Now, to describe the platform in 3 words, it's basically a decentralized lending ecosystem. And based off everything I read in the white paper, to me it has a lot of commonalities with a small bank. And since the long-term goal of the protocol is to democratize decision-making and the community is able to directly profit, it's almost like a community-owned and run bank. And I think this part of the white paper does a really good job of encapsulating what the project is trying to achieve. The Cobalt lending platform aims to bring together borrowers into a fair democratic voting community in order to get all size loans, for microloans to 6-figure loans, all without the oversight of a bank, completely governed by the community, and therefore the community directly profits from its involvement. Here's the flow that you should expect to see if everything goes to plan. First, the borrower submits a proposal for the loan to the community. The borrower locks collateral into a smart contract. The loan gets voted on by the community. If approved, funds are dispersed to the borrower, and the borrower can choose from any funds that are available on the platform, whether that's Bitcoin, Ethereum, Cobalt, or DAI. Once the borrower repays the loan, the collateral gets unlocked and returned to the borrower. And as this process takes place, it's going to generate fees that are going to go to certain market participants within the Cobalt lending ecosystem. And their objective is to go through multiple phases. Generally speaking, the more collateralized a loan is, the amount of fees that you can extract will be smaller. But as you require less and less collateral, you'll take on additional risk, but you'll also be able to extract a larger fee. And based on the white paper, you can see that the end goal is exactly this. They want to get to a stage where they're able to provide under-collateralized loans, extract sizable fees, and distribute them to the ecosystem. Now, when it comes to governance, initially they're going to be highly centralized, with the goal of one day becoming an autonomously run, decentralized protocol. This is pretty consistent with what a lot of other DeFi protocols are doing, and to me it makes a lot of sense. To use an analogy, let's say you're raising a kid. When they're a baby, they're going to need a lot of attention, but as they grow older and become increasingly independent, you'll need to give less time and attention. And one day they'll become a fully independent adult. And that's kind of how I view a lot of these DeFi protocols. Early on, you're going to need to nurture them, give them heavy attention, and if you do a good job, one day these protocols will be able to run themselves and be fully decentralized. Now, when it comes to voting, early on, you're going to have to use the website, and eventually they're going to have an app. But in the beginning, the foundation is going to be calling most of the shots. And the foundation is comprised of 9 member seats. 4 are elected board seats that can be voted in and out by the community. 2 seats are reserved for founders' multi-sig wallet, and 3 seats are reserved for the largest stakers. In my view, governance is going to be the next big chapter in DeFi. I think a lot of the platforms are really focused on scaling, functionality, and growth, but I assure you at some point they're going to invest a lot of time into figuring out how to make governance work. So everything that you're looking at here on this page is super experimental. I mean, the model that they're currently using is a little bit similar to the Melon protocol. But the point I'm trying to make is that we have no guarantee if this structure is going to work out, and that's largely because we don't have a precedent to work with. And for that reason, I want it to be abundantly clear to the audience that there's a high possibility that the model that you're seeing here is going to change in the future. All right, now moving along, we're going to be talking about tokenomics. Before we talk about how they're going to be allocated, just note there's 1 billion tokens that are pre-mined, meaning that no new tokens will ever come into existence. In fact, they actually have a deflationary model where a certain portion of the tokens will be burned. Now, out of that 1 billion tokens, 20% are allocated for the token sale. Cobalt founders will get 10% of the supply, which is 100 million tokens. The foundation will receive 22.5% of the supply. The treasury will get 42.5%. And the remaining 5% is going to be allocated for airdrops to help bootstrap adoption. And since we're talking about tokenomics, I think it's very relevant to discuss how the fees are going to be dispersed. So earlier we discussed how the protocol is going to generate fees. These fees are going to go to the following parties. The lion's share, about 88% of the fees collected, are going to go to stakers and validators. About 12% of the fees are going to be given to the treasury, and the remaining 0.4% are going to be burned, creating deflationary pressure on the token. Now, in terms of how the various parties are going to use their funds, well, the treasury will use the funds to pay for expenses, loans, dividend payouts, and investments. The foundation plans to use its funds for operating expenses, and the founders will use their supply for expansion and future development. And I do want to highlight that there's no information on how long the funds are going to be locked, if at all. Presumably, since the team has a vested interest in the success of the project, they're not going to just dump a lot of the tokens into the circulating supply. That information would have been nice to know. That way we could anticipate inflationary pressures coming sometime in the future. But you never know, they might expand on that once the platform is live and everything has been deployed. So make sure to include this information in your thought process as you guys begin to dig into the project. Now, in terms of the roadmap, this is what you guys can expect in the coming months. As stated earlier, the token sale is taking place starting October 31st. It's going to last for 30 days. During November, they're going to hire more devs, extend partnerships, and launch their DEX. There's not a lot of information on the DEX, but it looks like it's going to be somewhat comparable to the OX protocol. During the December-January timeframe, they're going to allow users to vote via their mobile phones. You'll see multiple exchange listings on their DEX. And along with voting support, you're also going to see ERC20 and Bitcoin support in their wallet. And during this time frame, they're also going to build out a marketing team to aggressively market in North America, Sweden, and Japan. And by mid-2021, they plan to have their own working blockchain with stakers and validators. And by then, we should also start seeing funding of loans within the protocol approved by community vote. When it comes to the shortcomings, I wanted to begin with the fact that the team is anonymous. And because you don't know who the team is, who the developers are, you really have no idea who you're giving your money to. Many of you guys who are involved in the DeFi space have probably witnessed a lot of rug pulls. So if you guys decide to invest in this project, just know that the team could easily take your funds and not produce any working product. And that's just a risk that you're going to have to accept if you decide to invest. On the flip side of that, it is kind of good to be somewhat pseudo-anonymous. If you look at what happened to BitMEX, they actually went after the team and indicted people. So in that respect, it's kind of an advantage to be pseudo-anonymous, because that way if anything happens to one of the leaders, the face of the project, business will go on as usual. And if any government out there has any sort of regulatory grievances towards a project, if there's no one person to go after, it'll really limit their ability to hinder the growth of the project. In fact, I think that's the direction that a lot of these DeFi protocols are taking nowadays. A few of my favorite DeFi projects like Hedgic, Rune, they're all run by pseudo-anonymous developers. Another con is that they may be overextending themselves a little bit. They're going to be launching a DEX. It's my personal opinion that most projects should just focus on the core product that they're trying to deliver. There's a lot of people already innovating in the DEX space. Why not copy and paste some of their open source code? This way you can let the DEX teams focus on the DEX, and more likely or not, these DEXs are already going to have an existing liquidity base. And that way the project doesn't have to worry about liquidity. It'll be there from day one. I mean, take a look at what Melon Protocol did. They integrated Uniswap. This allowed all the fund managers on that protocol to go in and out certain ERC20 assets. Instead of building out their own DEX, they're letting other projects innovate in that space, and they're piggybacking off of their success. Another issue I wanted to raise was with the tokenomics. I've read a few white papers back in 2017 and 2018. They were trying to incentivize non-crypto people to use tokens. Even though I appreciate the effort to increase adoption and utility of a certain token, until the tech is broadly adopted and we have better wallet infrastructure, I think it's going to be very difficult to get non-crypto people to hold and use tokens. I think the tokenomics for the internal ecosystem is great. I think that has a lot of prospect, but I'm not very confident it's going to work externally with the borrowers. We'll end the video with my closing thoughts. I think the market timing for a project like this is just perfect. And to be honest, that's because of the bias I have. If you read a lot of the work that I do, you'll know that I think DeFi is going to be the future of finance. And we're probably going to undergo DeFi's first market cycle. Whether it's a good project or a bad project, it's going to go through a hype cycle. And eventually all that hype is going to be reconciled in a bear market. And right now, I think the cycle is just starting to get warmed up. This project doesn't check off all the boxes. I prefer DeFi protocols that have the potential to be highly composable because I think that's key in achieving ubiquity. Once you have a working DeFi protocol, it's not going to take too much work from other projects to integrate that protocol into their respective projects. For example, let's say you had a liquidity protocol that was chain agnostic where you could trade in and out various assets. Ledger could very easily integrate that into their web platform, allowing users to trade in and out assets using their ledger. And if that protocol achieved enough liquidity and they offered enough incentives for integration, you might see some of the smaller exchanges just get rid of their back end and integrate that DeFi protocol. And since they're trying to be their own independent chain, unless we get some of that interoperability infrastructure built in, I don't really see it being highly composable. However, I do like the fact that they're working on governance and they plan to fully decentralize sometime in the future. And I also like the fact that they focused on tokenomics and they decided to go with a deflationary model. Also, the team has been very good to me. They're very prompt with their responses, and the person or the people that I've interacted with have been very down to earth. And before I tell you whether I've decided to invest in the token or not, I just want to re-summarize the positive points. Number one, we're in a DeFi bull market that's just getting started. I like the team's governance model. I like the tokenomics. And despite the team being anonymous, the interactions I have only been good. And the last point that I didn't mention earlier is that nobody is talking about the project, which means that we're very early. The team plans to aggressively market in Q1 next year, which means you have a chance to get into a project before everybody starts talking about it. As a US citizen, I can't participate in the ICO, but once I'm able to purchase the token on the market, I do plan to use 0.25% of my portfolio to buy a few Cobalt tokens. Now, after watching this review, if you guys have any questions, I encourage you guys to write them in the comment section below, or you guys can join the conversation on my Discord channel. The link to that Discord channel is in the description box. With that, I'll go ahead and end the video. This is CryptoOneStop signing out. I'll talk to you folks next time. Bye.